Okay, gonna start. You ready, Kay?
Yeah.
Yeah, cool. Okay, welcome everybody to today's workshop. Please turn off your cameras and your mics during the duration of the workshop so that there's no background noise or any distractions. So today, as I'm sure you know, we are going to be going over financial management. We're doing a workshop on financial management for your business. And then at the end, we're going to have a super cool live demo of a spreadsheet tool that we've built that you can use to manage your business's finances and projections, etc. So before we get started, we just want to introduce ourselves so you know who you're talking to. So I'm Dominique Burns. I am the CEO and one of the co-founders here at Fizen. And on the other screen over there is Callan. Callan, I don't know if you want to quickly say a few words.
Hi, yes, I'm Callan. I'm an accounts manager here at Fizen and super excited to be here today.
Awesome. So that's us. That's who's going to be talking to you today. And now we just want to quickly give you an overview of what we're going to be talking about. So we are going to start off with why are we tracking our finances? Why do people tell a business owner that you need to manage and control your finances and your projections? Why is that helpful to you as a business owner? We're then going to go over some awesome tips and tricks that you can take home to help you manage your finances and your business finances more effectively. And then, as I mentioned in the beginning, we're going to give it over to Kay, who is going to take us through our financial tracker spreadsheet template, and she's going to show you how to use it. And we will be emailing this to you at the end of the session. If you're in our live workshop, if you're watching this on YouTube, you can go and check out our website under free resources. You can also find the free downloadable template. Okay, fantastic. So let's get started with our financial management. So first off, you might be asking yourself, why is it important for you as a business owner or as an SME owner to track your finances and projections? You've heard it's important, but why? Well, tracking your finances allows you to know how much money is coming in the door via your sales of your products or your services. It allows you to know how much is leaving your business in lieu of how much you're spending on cost of sales, which is the things you're paying for that helps you to make your product or your service, or how much you're spending in general on overheads like rent or salaries. Knowing how much money is flowing into and out of your business is essential to understanding if your business is in a healthy position. We all know that when we start a business, we're doing it for the aim of making profit. So we need to track and manage our finances to make sure that that is what we're doing. Tracking your flow of income and your expenses will help you to know if you can afford to take on new employees, if you need to cut your budget, if you need to build a better budget, a more realistic budget. It'll help you to know if you want to change a product or a service that you're offering because it's not selling. So maybe you have blue shirts and red shirts that you're selling, and you realize that, sorry, I'm just letting someone in. Welcome. And you realize that the blue shirts are selling, but the red ones aren't. So tracking your finances and tracking your income will help you to understand, oh, okay, I need to put this kind of product on hold because I'm not making a profit from it. I'm not making an income from it. Another reason why it's so important to track your finances is the wonderful concept of tax. So knowing what you bought into your business and what you spent, what flew out of your business, will help making filing your provisional tax or your annual tax easier, and it'll help you to find tax deductible expenses far easier. So for example, at Fizen, we track our income for the services we provide to our amazing clients, and then we track how much of that income gets paid on our or out to our cost of sales. So our cost of sales are things like the graphic design software we use to create the stuff that we're selling to our clients. Or it might include things like monthly subscriptions. So we use Google services to manage our internal processes. So that's an example of a cost of sale. And then it also includes our other general overheads. So paying our agents, paying our employees like Callan, and then paying myself as the managing director, as the CEO. And then also paying out to directors as dividends. Knowing all of these figures in Fizen helps us to ensure that we're always making a profit and we're not operating in the red. So it's important for you as a business owner to do the same. So now let's move on to when it comes to tracking your finances, you may think, okay, great, I've got some great theoretical knowledge. Now I understand sort of like what we're talking about. But let's talk about some tips and tricks, because managing your business's finances can seem very daunting, and we want to give you some practical ways that you can actually implement this. The first tip that we want to give you is to keep your personal finances and your business finances separate. If you're a solopreneur or you're a very small business with 1 or 2 employees, it can be tempting for you as the business owner to use your personal bank account as the business's bank account. So this means that you would put your personal bank account details on invoices, or you'd tell your clients or people, consumers who are buying your products, to pay directly into your account. This makes tracking your business's income and expenses super duper difficult to distinguish from your personal income and expenses. It also creates the mentality, the philosophy in your head that your business's money and your money are one and the same, which isn't true. You need to think of your business as a separate entity, as almost a separate person who pays you each month, as opposed to, someone whose money is in your account, or your business's money is yours. It's not, it's your business's. So that's the first tip. The first tip is to keep it separate. Keep your finances, your personal finances, and your business finances separate. The second tip is to stay on the ball. So as you see a deposit from an income or a sale come in to your business's bank account, note it down. If you're using spreadsheets, pop the amount into the spreadsheet, or if you're using a cloud-based accounting software like Xero or Sage, which we'll chat about a little bit later, pop it into the software immediately. This will help you not to forget to track a payment or to put a payment into your spreadsheet or into your tracking system. It's very easy to lose track of what comes in and what goes out of your account if you don't track it and make a note of it as soon as you see it, as soon as you see that email or that SMS notification. The third tip that we want to go over with you is to set a budget at the end of each month for the next month that's coming up. Setting a budget as to what you expect your business's expenses will be will help you to keep your expenses down. For example, plan for your monthly domain and registration fees and your marketing spend. So if we were doing that now for this month, we would plan for October's marketing spend and domain and registration fees now at the end of September. This will help you also to understand how much money you actually have to spend that month on your own salary or on other nice things. Maybe if you have a couple of employees, you want to give them a raise or something like that. If you budget, you will actually know how much cash you have to spend on something like that. The fourth tip we want to go over is creating projections and goals every quarter, 6 months, or year, depending on your business's size and the rate of your growth. If you're a super small business, you can set projections and goals perhaps every 6 months. If you're a bigger business or a business that's growing very, very quickly, set goals every month or every quarter. Having goals that helps you to measure your performance against what you had planned will help you to understand if the amount of money you're making or spending is good or if it needs improvement. From here, you can then make other operational decisions and shifts in your business to lead to a better, more profitable business. So if you see that you had made a projection that you would be at XYZ clients and you would be earning XYZ, and then you get to that month and you realize, oh geez, the projection said this, but we're actually here. We're way, way below that. Then that needs to make you sit down and think and talk to your fellow directors, or if you're a solopreneur, talk to yourself. And you need to think, okay, what went wrong? Were my expectations too high? Is our pricing too high? Is our marketing not good enough? Like, you need to start thinking about the nitty-gritty part of your business. The last tip we have for you for managing your finances as a small business owner is to invest in some sort of financial tracking system. This can be a free spreadsheet template that we're going to give you today at the end of the session, or if you're watching this on YouTube, you go to free resources under our website to download it. Or it can be a bookkeeper or something like QuickBooks, Sage, or Xero. Those are all cloud-based accounting softwares that you pay a monthly amount for, a monthly recurring subscription for, and they're really powerful. Depending on the size of your business, I would suggest starting with a spreadsheet like the free template we're going to give you, and then moving to software like Xero. And then eventually, when you're making enough sales, or you're just too busy to be able to track everything yourself, then you take on a bookkeeper or a full-time accountant. A bookkeeper will not take over managing all of your incomes and your expenses and all of your financials, but they will take care of the important stuff, leaving you to daily things like invoicing, etc. So, for example, at Fizzin, we started off in the first month or so with me doing it all on spreadsheets, which was an absolute disaster because it's not one of my strengths. So we moved to a bookkeeper for multiple reasons. I was terrible at it, and the other was being that we were just getting too busy, and I didn't have time to manage it myself. And we needed to start thinking about tax and all of those kinds of things. So we currently work with an accounting service, an amazing accounting service, Streetlight. Go check them out if you are looking for an affordable accounting service for small businesses. And they take care of all of our major stuff. And then I just every day have to log in basic stuff. So I manage our cash flow and our invoicing and all of that kind of stuff. So now that we went through all the amazing tips with you, we are going to move to Callan, who is going to take you through our fantastic free downloadable template. She's going to show you how to use this financial tracker to manage your income, manage your expenses, and to see if you're making a profit or a loss in your business. Over to you, Kate.
Cool. Thanks, Dom. Thanks for all those very helpful tips and tricks. It was very, very insightful. Cool. So I've moved over to Excel right now. This is the spreadsheet platform that I'm going to be using. You can also replicate this on Google Sheets if needed. However, I just found Excel much easier to use. Cool. So moving on. We have 4 tabs over here, as you can see. And the first one is your fixed expenses. So as a company, majority of companies will have fixed expenses, whether it's paying for your website hosting and domain registration, or perhaps you use Canva, such as we do, or perhaps you are couriering products to your customers and you would have to pay for your monthly courier fees. So it's always a good idea to have a separate list of what your fixed expenses are as a company. That way you can see exactly what your total monthly costs are in terms of fixed expenses. So what do you have to pay for every month? And then it's just always helpful to see how much that adds up to as a yearly cost. Then next up, we have Invoice Summary. So if you weren't at our last webinar, highly suggest you go and check that out, because this tab is an extension, or it was taken from that tracker, simply because everything in financials, inventory management, invoice tracking, it links to your income and your finances as a small business. So this tab is taken from our previous tracker, previous webinar. Go check that out. There are no formulas in this one at the moment. That's just for IT reasons. You can't use 2 Excel sheets at the same time. Yeah, so Invoice Summary is pretty much rundown. It is the total of your invoices that you've sent out to your customers or clients, and just so you can keep track of exactly how much your total invoices are and how much income you're making each month. Going along with that, we have the income and expenditure sheet, which is very, very basic. It's an inputting sheet where you pretty much go in and input each line item of your expenses and your income. For line 2, if you take a look here, that is monthly sales. So this is a formula that is taken from your invoice summary. It's pretty much a total of all of your monthly sales for the month. And every time you input a new row with your total amount for your invoice, it is automatically calculated and added to your monthly income. So it saves you time in the sense that you don't have to now input a line item each time you make a sale or invoice somebody. It automatically puts in one line item, keeping your spreadsheet looking very clean. Then we just have a couple of extra random line items for expenses. So once again, hosting fee, courier service fee. Perhaps you purchase raw materials for your products. If you're a bakery, you need to purchase flour, salt, sugar, whatever it is. That would be inputted as a product expense. And then if a customer returns an item and you now have to refund them, that is also considered an expense. Great. And then lastly, we have the profit or loss document. It is very, very simple, formula-based as well. Every time you make a sale, obviously your income will increase, and every time you spend money, your expenditure will increase. And then lastly, you have your profit or loss, which is also a very simple formula. It's income minus expenditure. Very basic. Cool. So now that we have gone through all of these, I'm going to take you through building them. I'm not going to be building the invoice summary, as like I said, we did it in our last webinar. You can go ahead and check that out to see how we build that one. So let's start with our fixed expenses document. This one is fairly simple. It has a very basic formula in the sense that is just a sum formula. So we'll just go ahead and copy our heading right here. Put that in. You always want to make sure that all of your headings are readable. And then it's purely input based. So you'll have to sit and think as a business, what do you have to pay for each month? What do you have to make sure that you have that certain amount of money in your bank accounts to be able to pay for those services? Because if you don't pay for those services, it's going to put a big backlog on your productions. So if, for example, we look at Wix domain fee or website hosting, so if you are an online store, you would need to pay for your online store each month. Otherwise, your online store is going to get put on hold. Nobody can purchase from you, and it's a disaster. So we'll just copy these in. Just delete that one. Great, so now we've made our list of our fixed expenses. Now we obviously need a total column. Total expenses, and then fairly simple. There's two ways you can do this. So the first way is you can say equals sum and add it in that way, enter. Alternatively, you can just go alt equals and it automatically calculates that for you. Great, so that very, very easy, simple formula on how to build a fixed expense tracker. Next up, okay, invoice summary we're not going to do. Income and expenditure. So this is where it gets a bit more tricky because we're working with a more in-depth formula, the sum F formula. We've spoken about this one many times before. Yeah, so we just input a new sheet there. Then we want to go ahead and take our headings, make them more readable. And then you just want to highlight all of these and go insert and insert a table function. So now our table, what's it doing over there? So the table has headings, so we're just going to click that, and that's obviously to make sure that your headings don't become a line item, they stay as headings. So now we have a table. So now you can look back. The month is a formula-based one as well. So this, how this formula works, you go equals month, and the month will be for that. And then every time you input a date, it will automatically calculate the month for that one. So if we put in today's date, the 16th of September, it will automatically just take that 9 for September. Then we have description, which is text input. So that can be anything. We'll just copy monthly sales for January. So then obviously this will need to be the last day of January. You put it as the last day of January because it's your total monthly sales for the month of January. So if you put it for the 15th of January as your date, then the rest of the days for January is kind of just going to get lost. So the last day of January, monthly sales, then categories. So we're going to put in a data validation tool, which is very simple drop-down tool so you can choose your category. So to do that, you want to click your whole row. You want to unselect the first column little block. So how you do that is you just hold Control and you click it. And then we're going to go to data, this little data validation tool. And we're going to change it to a list. And then we can put whatever we feel. So income, we could keep it really basic, say income and expense. And then maybe refunds. Cool, so now we have our little drop-down tool we can choose. So this is obviously an income. And now we use our formulas. So to do that, I'm going to just automatically put it in here. So the sum if formula is equals sum if. So your range is now everything that you are choosing from in your income. Sorry, I'm doing this in the wrong. So credits, it's income, so it's a plus, so it's equals sum if. And your range is going to be your month, which is January. Where are we? Invoice summary. So we're going to put month 2. Criteria, we're going to go back to our little document. Your criteria is the 1. So how the sum if formula works is pretty much it's saying if this little block is equal to 1, it needs to calculate all of the expenses in this column that has a 1 next to it. So everything with a 1 over there. So if I had to input a new line item and it was for February and this item was 2, it would not calculate it into this formula because it doesn't have a 1, it's a 2. So that's the only formula we use in this. And then, yeah, you just go ahead and input. So if we have an expense, so say it's the 20th of January, you want to drop down your formula over there. Come on. There we go. So now the formula follows through all the way down. So every time you input something, I could input something over here, 25th of the 5th, and it automatically changes to a 5. So let's input an expense for the sake of our profit and loss document. So what fixed expenses have we got? We've got Wix hosting fee. Let's pop that in there. Category, we'll go to expense, and then the total is 209 for the month. And we'll pop it into debit because it's an expense. Great, so now we have an income, we have an expense, and now we want to calculate what's our profit and loss for January. So we're just going to create a new tab. Go ahead and copy those headings. You want to input your months manually. This is also a manual input. And now we reach our sum if formula again. So how your sum if is going to work, you're going to do sum if, equals sum if, otherwise it's not going to work. So your range, we're going to go back to our income and expenditure documents, but we're going to use the new document, the sheet 2. And the range is for the month. Then we're going to come back here, and our criteria out of that month is month 1. And then sum, range, sum is numbers. So we are calculating income, so we want to use the credit. And then same thing for expenditure, except we're going to use the debit column except for the not the credit column. So your range is your months. Criteria is month 1, and sum range is the debits. Oh, I took it from sheet 3. Sorry. There we go. And then simple formula equals C2 minus D2, and we get our total profit and loss for the month. If you wanted to do a yearly thing, you can put it total for the year. Let's make it look pretty with some pretty lines. And then simple alt equals, go forward, alt equals. Equals. Sorry, that was meant to be that. Minus that. And there you have it. So now every time you input a new line item, so if we go ahead and take our invoice summary and we put something in February, which is 2, and let's just, I don't know, 200. Income and expenditure document, we will go in and put in February 28 days. The monthly sales February. Oh, going to have to retype in our sum if formula. Oh, wrong document. I've just lost where I put that in. Okay, never mind, but you get the point. If you input it in, it will automatically calculate that. Oh, now it shows up. Automatically calculate that amount for February. Oh, that explains it. I put it in as 9 instead of a 2. Okay, watch what date you put in, because apparently that will mess up your formulas. And then it will just keep calculating on February, March, April, May, June, and so forth. Cool. That's the end of our spreadsheet run through. We'll head back over here. And just a reminder that Dom did send out a discount code for our social media audits. Very, very awesome discount. You don't want to miss out on that one. And then we will also be sending a feedback form. We send them out at the end of every webinar. We just love to know what you guys think, what you enjoyed. Maybe there's something you didn't quite enjoy. We would love to hear your feedback. And then lastly, as Dom said, we will be sending out the free downloadable straight to your inbox, or alternatively, you can download it off of the website. Great. Thanks so much for watching, everyone. Dom, is there anything else you'd like to end off with?
No, thank you so much for attending. Have a fantastic Thursday. We'll see you next week for the final workshop in our spreadsheet series.